Directly from 42nd Street in Midtown Manhattan, New York, I am your host Harbin and you're watching my channel YOLO, You Only Live Once.
Let's talk about today's topic. What are pre-tax and post-tax retirement accounts? What are the limits for 2023? How to invest in backdoor Roth IRA if you don't qualify because of your income limit. So what are pre-tax saving accounts? Accounts allowed by IRS that allows pre-tax contributions so that the contributions are not taxed. So that means you are contributing from your current income, and whatever amount you contribute to these accounts, it will not be taxed. So you actually save tax on that income. So these are individual retirement accounts, IRAs, 401ks. These are the accounts offered by for-profit companies. 403b, these are the accounts offered by non-profit companies. Now, what are post-tax retirement accounts? The accounts allowed by IRS where contributions are made after the tax have already been paid on the current year income, and that money is then put into this account. The benefit of these accounts are that the withdrawal from these accounts are never taxed. The cons for these pre-tax saving accounts are whenever you will withdraw from this account, whatever amount is withdrawn is taxed as current uh, year ordinary income. So that means if you are withdrawing something in 2023 from your pre-tax saving accounts, they will be taxed at the 2023 income tax rate as ordinary income. Any withdrawal from post-tax retirement accounts is actually tax-free. So in future, you will never be taxed on any withdrawal. These are Roth IRA, Roth 401k, and the Roth 403b. Now let's look at the limits for 2022 and 2023. So 2022, the limit for individual retirement account was $6,000. It is now getting increased to 6,500. There's no individual limit, income limit, no couple income limit, and the tax status is pre-tax. The catch-up IRA for those who are actually have reached the age of 50, they can actually contribute 1,000 more into the individual retirement accounts, and this limit is not changing for 2023. So it will remain at $1,000. And again, there's no income limit, and it's a pre-tax contribution. Then 401k, 403b, the 2022 limit was 20,500, which is getting increased to 22,500. There's no income limit, there's no couple income limit, and this is pre-tax. So that means you save tax on this amount during your current year, during your contributing year. The catch up for 401k and 403b was 6,500 for 2022. It's now also increased to 7,500. Again, there's no individual or couple limit, and then tax status is pre-tax. Then there is Roth IRA. The limit for 2022 is 6,000. It is now getting increased to 6,500. For individual income, the limit is 138,000 starting and phase out by to zero by 158,000. And couples who are earning more than 218,000 to 228,000, they will also will not be able to contribute to Roth IRA if they have the income above 228,000. Again, this is post-tax. That means whatever you contribute to this account, you have already paid taxes on that amount. Catch up for Roth IRA is again $1,000 for 2022. It's also not changing for 2023. It remains 1,000. The limits is that you have to be qualified to contribute to Roth IRA in order to do the catch up. The Roth 401k is again 20,500 for 2022. It is increased to 22,500. There's no income limit, but it is post-tax. So you don't save any tax on this contribution. Again, the catch up for Roth 401k and 403b will remain, has also been increased from 6,500 to 7,500. Again, it's post-tax and you don't save any tax on the contribution. Now, how much you can maximum contribute to retirement in 2023? The retirement for 401k to 403b is 20,500 in 22. Now it has been increased to 22,500. The catch-up contribution was 6,500. It is now increased to 7,500. If you have a company match, like my company matches up to $9,000, and that is not changing. So it's $9,000 for 2022 and $9,000 is going to 2023. The after-tax contribution limit was $31,000 and $9,000. The total was 61,000 without the catch-up and 67,500 with the catch-up. This is now increased to 73,500 with the catch-up and 66,000 without the catch-up. So that means you can contribute 61,000 for 2022. That was the maximum contribution without catch-up. And that has been increased to 66,000. With catch-up, it is going to 67,500 to 73,500. So that's a big amount. Like, okay, if you are going to work for even 5-10 years, just your contribution itself can be 700, 800,000. So that's a big opportunity if you can contribute to 401k. Now, what is the benefit of contributing the after-tax contribution to 401k? Because if you say that, okay, I have after-tax contribution, I can actually invest in anywhere. Why do I need to actually contribute to 401k? The benefit of investing or a contribution to 401k is that this after-tax contribution can be converted inside the plan to Roth IRA. So now how to contribute to Backdoor Roth IRA? This is one of the best opportunity IRS has provided to employees that allows the after-tax 401 contribution to Roth IRA by in-plan conversion. That means as soon as you contribute to your 401k, the after-tax contribution that can get converted into Roth IRA automatically inside the plan itself. And you can see you can contribute a max of 43,500 to Roth IRA for 2023. And that is without the company match. If you have a company match, for me, it will be 34,500 because my company matches my IRA contributions up to 9,000. And that 9,000 cannot be converted into Roth IRA because that's a traditional IRA contribution. But for me, it is more beneficial to have that 9,000 contributed to my account because it's free to me. But if you don't have the contribution from your company, matches from your company, you can actually increase your after-tax contribution up to 43,500. That can be converted to Roth IRA. So this is one of the best way to own a Roth IRA if you don't qualify for Roth IRA because of income limit. And even if you qualify for Roth IRA, but this will allow you to actually contribute much more to Roth IRA than the 6,500 you can contribute outside of in individual Roth IRA accounts. So if you have not opened, or if you are not contributing to 401k or 403b or individual IRAs, make sure you do contribute. This is one of the best option IRS has provided to employees to contribute towards their retirement. You can actually, most of the 401k provides brokerage accounts. You can actually use this Roth IRA and convert those into your brokerage account and then invest in actually a growth stocks for long term. And since this is, once it's converted to Roth IRA, the withdrawal from this portfolio will never be taxed. And you can actually also pass it to your next generation as a untaxable account. So that means it will not be even taxed when it gets to your next generation. So as the best thing to do as a estate planning also. So if you have the opportunity, please contribute to 401k after tax and convert that after tax money to Roth IRA. I hope uh, you like this topic, you enjoyed it. Please subscribe to my channel, like the video, and leave me a comment. Once again, if you have not started contributing to 401k, IRA, make sure you explore this option of contributing after tax to 401k and then converting it to Roth IRA.